This small cap AI stock is about to explode. And here's the funniest part. Wall Street has almost zero ownership of this company. 42% of shares are owned by retail. 38% of the company is owned by insiders, people that work at the company. Do you know how powerful that is in and of itself? You won't find that with virtually any other company that exists on the markets today. That means that if you invest in the company and make money, insiders are also making money. Their interests are aligned with yours. It's one of the biggest green flags you could ever have in investing in a company. But what if I told you only about 14% of this company is owned by private companies and 5% of it is owned by Wall Street? They by definition have like zero ownership in the company. Now, granted, these numbers are going to change a little bit because Citadel just bought about 7% of the company, which is one hell of a backing. The stock that we are talking about in today's video is Resolve AI. This is a company that is one of one. It is a company that is trying to redefine how online shopping takes place and eventually redefine how crypto shopping could work. What they're doing and the product that they have is an AI model and a checkout platform that is specifically tailored to AI. The CEO, Dan Wagner, is incredible, first and foremost, but he puts it like this, which I think is an easy way to understand it. If 10 people go into a Nike store with the idea of purchasing something, 7 out of 10 people are ideally going to purchase something. If 10 people go to Nike's online website with the idea of purchasing something, only about 3 people out of 10 are going to purchase something. Resolve thinks with their AI model, specifically tailored to retail, they can raise that. Okay, the company boasts 25% more online conversions, 8% average order value increases, right? People are spending more when they check out and use Resolve's platform, okay? And 10% overall higher revenue for the companies that partner with Resolve. Now, it took this company 9 years to develop this platform. Nobody else is focusing on this $30 trillion market opportunity, which is online retail. Now, in a more Hail Mary scenario, they do have a partnership with Tether, and Resolve is trying to revolutionize how people use crypto in payments, okay? If you are anti-government, as I know a lot of people are, and you do not want to own US dollars, I don't blame you. Every day, every month, every year, dollars sit in bank accounts, they lose money, okay, via inflation. If you put your money into a crypto asset and you opt to spend that money with crypto, you can do it with Resolve and Tether. The idea is Resolve is going to instantly settle transactions for the merchants and for customers, charging you nothing to do so, but charging a transaction fee on the back end, okay? That is more of a Hail Mary kind of longer term investment thesis in this company. But what I'm really interested in is the online retail AI experience. Like, for an example, if you could go to Pandora or K Jewelers or something and say, hey, what is the most popular wedding ring right now? Okay. For an example, it's going to bring up like a princess cut or emerald cut or whatever it is and say, where is the best pricing on this ring? And it's going to show you all the stores that have pricing. And you can click on one and say, hey, do you think a 35-year-old mother of 2 that likes adventure and, you know, that laughs a lot would like this ring? Blah, blah, blah. It's going to say yes or no. You can click on it, buy it, check out, boom, ship to your house. Okay, that's the kind of stuff we're talking about here. Or you could go to Nike. Okay, this is something I struggle with a lot. And one of the reasons it's very hard for me personally to shop online. Okay, if I'm using Resolve, I'm going to go to Resolve, right? Go to Nike or whatever company that is partnering with Resolve. And I think there's going to be many of them. Nike, by the way, should. And I would say, or let's use, let's use Nike, okay? I'm gonna go to Nike and say, hey, I fit a large sweatshirt in American Eagle. What would a large comparable be in Nike? And it's probably gonna say like a medium, okay, for an example. Or I could go, go to North Face if they partner with Resolve and say, okay, I wear a medium in Nike. Would a medium in North Face be okay? Or would I want to go with a large? Okay, things like that. Okay, you can ask very specific retail shopping related questions. Or if you go to Home Depot, for instance, and you say, hey, Home Depot, I'm looking for something that will match my, baby blue walls with gray tiling. Should I get a gray cabinet or a black cabinet? What would appeal more to the eyeball? Okay. Tons of examples to this, but that's the generalized point. Again, they have no competition. This company that Citadel just took a stake in is about to explode. You're looking at Resolve here on the chart today. The stock is outperforming, up 5.34% on the day today. And just from a simple, kind of technical analysis, let's not get too overcomplicated. It looks like there's a very short-term cup and handle formation with the cup here and the handle that looks something like this, right? Cup, short-term handle. I know the moving averages make it a little bit harder to kind of see and differentiate. Boom. Now you're in full swing, full steam ahead. Now, last earnings, the stock went up over 32% following earnings. Then it went up 6%. Then it went up 11.5%. Then it went up 4.5% the day after, going from $1 to $2.50 quickly. Now, I personally think the company's probably going to raise guidance again in this upcoming quarter. I think the company could be anywhere from 120 million to 150 million in end of the year ARR. Now that is annual recurring revenue. This is a pure play AI company, so you kind of have to value it alongside other pure play AI companies. Now, Resolve is going to be profitable or break even around 90 million in ARR. So that's going to be at some point by the end of this year. So obviously the higher the guidance is, the better off. Okay, but they should be profitable by the end of this year. Now, the company is currently around a $700 million market cap. So at 100 million in ARR, it's only trading at a 7 times price to sales multiple, which is lower than any other, high-flying AI stock today. Dramatically lower. BBAI, SoundHound, Nebius, Applied Digital, just like literally name it. And Resolve is trading at like a fraction of those other companies. The reason for this is because of their de-SPAC process that is almost a year ago now. On August 17th is the 1-year de-SPAC that's going to be over with. That's why there's virtually no ownership from hedge funds, institutions, and large, Wall Street firms, is because they typically don't invest in SPACs until at least a year is over with, okay? Whether it's DraftKings or Lucid or blah, 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 that went public via SPAC in the last couple of years, they all go through this. There's a lot of restrictions and things you can and can't do, okay? It's just messy, and SPACs have a very bad historical performance for the 12 months following. But on August 17th, a couple days before they're scheduled to report earnings on August 21st, the requirements are going to lift, and there's going to be a lot more potential buying pressure in the company. Kind of aligning with earnings could be a pretty powerful catalyst. Now, I'm going to speculate here, and I'm going to say Citadel probably did not take a 7% ownership stake in the company if earnings are going to come in bad. I'm just going to go out on a limb there and say they probably have a heads up of what earnings are going to look like. Like, wouldn't you? If you were about to buy 7% of a company and they were set to report earnings in less than a month, wouldn't you want some idea of what earnings are going to look like? Probably. Okay, that's just how these things tend to work with private placements. So it's a pretty, I don't want to say surefire sign, because I'm not a financial advisor, I'm not a financial planner. This company could go to zero. Keep that in mind. Don't be a jackass. Invest what you are willing to risk, blah, 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 all the typical disclaimers. I could be wrong, not a financial advisor, just to be clear on that. But I think it's a pretty surefire sign, in my personal opinion, earnings are going to come in pretty damn good. Now, again, there's other things that are set up here to be very positive. What I'm really bullish on is 2026 full year guidance, which we're probably not going to get this quarter, probably maybe next quarter, but definitely for Q4 in early 2026. I think the company is going to project 300 to 500 million in ARR at a 10 times price to sales, which I think is reasonable. That puts the company anywhere from $3 to $5 billion. It's a $700 million market cap today. So, $5 billion market cap divided by $700 million, roughly, assuming we don't get any further dilution, is a 7.14x from here. Okay, that's why I have $75,000 in the stock. Okay, and I showed my position in prior videos that it's $535,000. I don't think there is any other better risk to reward company because of the simple value proposition they offer. Why would you not partner with Resolve if you knew about the product? Okay, like, why would you not? There's no reason to not partner with Resolve. There's no other alternative besides if you make your own internally, and that's a lot of hassle, a lot of work. Doesn't make sense to do that a lot of the time. Partnering with Resolve makes the most sense for everyone involved. I just think they're still a baby company, and they haven't exactly got the word out yet. But especially as I think the stock starts to do better, there's a really big halo effect there where companies that do good tend to continue to do good. Okay? Where just the stock doing better, the company getting more valuable can bring in clients that way. And there is no, again, shortage of high value clients at this point. Again, I should mention they have a partnership with Microsoft and Google, but New Era, Office Depot, Mexico, Omaha Steaks, right? There's a lot of well-known companies here. Rebag, Discount Tire, okay. And here's kind of a little demo of what it, again, looks like. It says, my bookcase finally arrived today, but it showed up damaged. We are very sorry for the delay and inconvenience. Would you like to return the item? Start the return process, okay, or replacement. They, make it very easy. Duncan, the Suns, Kohl's, Qatar Airways, like, we're only scratching the surface here. Very, very surface level kind of stuff here. And again, partnership with Microsoft and Google helps make all of this possible. And their Brain Commerce, their, large language model here, again, they're showing examples of, giving details, price ranges, and recommending different things, right? And then you simply click buy now and buy it. It shows you reviews. Like, there is no reason for any company not to partner with Resolve. And that's the longer term growth thesis on why I think this company that, again, only started selling this product commercially in the first quarter of 2025. Like, they spent 9, almost 10 years building this company and just launched this year. One of the reasons, again, why it's so underknown on Wall Street. It was basically a pre-revenue company last year with only $185,000 in revenue. Okay. This, I think, is one of those rare opportunities that does not come along all too often. Because I think to myself, what's going to stop this company's growth? It's going to be very difficult to stop this company's growth. Starting at 100 million in annual ARR, can this company get to $1 billion in ARR annually? I think probably a lot faster than people think. Even the CEO said 2-3 months ago in an interview that he talked about why Wall Street doesn't invest in this company. He talked about the de-SPACing process that keeps Wall Street away, that they've actually got a lot of inquiries from hedge funds and institutions to invest in the company, but they're weary about the 12-month restrictions with SPACs. And he said this company is a diamond in the rough. After August 17th, when he's able to, he wants to go out and buy stock on the open market. And again, this is a company where insiders already own, 38% of the company. Now, the numbers are going to change a little bit because Citadel just bought a stake. So all the other categories that I mentioned at the start of this video are going to fall, and the other, hedge fund institution is going to go up, okay? But again, like insiders, heavy ownership in the company, okay? See this holders here. Like this guy's 14%, this guy is 7%, this guy's 4%, 4%, 4%, 2%, 1%. Like it just goes, the list goes deep, okay? And Wall Street they don't know about this company yet. Option activity in this company, again, very, very positive on the options that we have open right now. The August 15th chain is 91.5% call volume today, 82% call open interest. September 19th, 90% volume today to the call side, 76% call open interest. November 21st, 80.33% call open interest, 97.5% call volume today. And again, for February 2026, this is the most bullish one. You have open interest of 95% calls and volume of 99.5% calls today. That's crazy. 99.5% call volume today. The put volume at 0.51%. There's almost no puts being bought in this company. Again, it's a low stock price, blah, blah, blah. But I think it just highlights, again, the diamond in the rough status that this company is currently at. 8.6% short interest of free float. That actually fell quite a bit from the highs of 11% in late July. So it looks like over the past 2 weeks or so, hedge funds, institutions that are short this company, I think a lot of it's just trading algorithms that short small caps, right? We understand how that works. They just kind of indiscriminately short certain sectors at certain times. Well, they've started to cover quite a bit on short positions heading into earnings. So call me crazy, but I think this stock could very soon be in the $5 to $6 range, especially if earnings are as good as it looks like they're going to be. Now, I do want to get into some of the other news today as well for markets, because you can see the Russell up 1.7% today, S&P outperforming as well, up 1.3%. So let's get into that now, but leave your thoughts on Resolve down below in the comment section. Now, this, I think, is pretty incredible news as well. It says Apple App Store spending climbs 13% in July, the highest since November of 2024, in a time in which a lot of Wall Street is worried about growth slowing down. To see more discretionary-like spending increases is a good thing to see. Goldman sees policy news, ISM data, and Fed speeches key to this week. Goldman Sachs sees policy updates, Thursday's ISM services data, and Fed speeches as major market drivers this week. They say volatility rose last week with S&P 500 1-month implied volatility at 29 and realized at 26. Put to call skew jumped as investors hedged after weak economic data, especially post-jobs report. With most earnings behind us, 72% of the S&P 500 reported, attention shifts to healthcare, energies, utilities, and semis. Also, small caps, okay? Small caps are going to be reporting, small and mid cap companies, over the next couple of weeks. So a lot of the stocks that we invest and we trade in the trading community are yet to actually have reported. So a lot of under the surface moves are going to be happening, but you have gotten those big tech earnings out the way. So less of an S&P headline risk, okay? Because earnings have come in good. You don't really have that, like, you're not going to get a small cap or mid cap that reports and the S&P goes up or down 1%. Like, that kind of volatility from earnings is behind us. So that's actually a positive in my view. Now, Goldman sees opportunities in underwriting financial stocks given high volatility and fewer near-term catalysts. Since July expiry, S&P 500 stocks are down 1.9% on average. A little bit of weird news as well. Russian Foreign Ministry says Russia no longer considers itself bound by the moratorium on the deployment of short and medium range missiles. There was news over this weekend that Trump is sending like 2 nuclear submarines closer to Russia, kind of, not great headlines. And then Russia says this. So there is kind of a weird dynamic happening right now. It's not affecting markets at this point, but like any threat of nuclear war could be an issue for markets at some point. Although I don't know if that will happen or when that would happen. GM sold 19,000 EVs in the US in July, up more than 115% year over year. Again, with Wall Street concerned about the economy, getting good news like this, high, growth rates on, again, kind of discretionary purchases, if you will. Private company hiring bounced back with 104,000 jobs increase in July, the ADP has said. Moody's chief analytics economist Mark Zandi says the housing market is getting so weak that it's poised to become a significant drag on overall economic growth. Now, in the news today as well, Trump threatens higher tariffs on India over Russian oil. President Donald Trump said Monday he will substantially raise tariffs on India for buying and reselling Russian oil at a profit, accusing the country of ignoring the war in Ukraine. He didn't specify the new tariff rate, but previously mentioned a possible 25% tariff on Indian imports and other unspecified penalties. Despite the threats, Indian officials told Reuters they will continue purchasing Russian oil, citing the issue's sensitivity. Germany's finance minister says U.S. Treasury Secretary Bessent and I have been in constant communication, and I want to have a good relationship. Germany's finance minister says, I am positive that there is a deal, but there is a lot to clarify with the U.S. Per CNBC, the EU will delay planned U.S. tariffs for 6 months to allow for trade talks. Today, Donald Trump. Wow, I was laughing so hard when I seen this pop through on my phone. I'm not going to read the whole thing because it's not it's not a huge deal, but it says Sydney Sweeney, a registered Republican, has the hottest ad out there. It's for American Eagle, and the jeans are flying off the shelves. Go get them, Sydney. On the other side of the ledger, Jaguar did a stupid and seriously woke advertisement that is a total disaster. The CEO just resigned in disgrace, and the company is in absolute turmoil. Who wants to buy a Jaguar after looking at that disgraceful ad? Shouldn't they have learned a lesson from Bud Light, which went woke and essentially destroyed in a short campaign? The company. The market cap destruction has been unprecedented, with billions of dollars so foolishly lost. Or just look at woke singer Taylor Swift. Ever since I alerted the world as to what she was saying on Truth, that I couldn't stand her hate, she was booed out of the Super Bowl and became no longer hot. The tide has seriously turned. Being woke is for losers. Being Republican is what you want to be. Thank you for your attention to this matter. Trump just went boom, 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 boom. He's firing shots at everyone today. I mean, Bud Light got the smoke. I mean, Sydney Sweeney got praise. Jaguar got the smoke. Taylor Swift got the smoke today. I mean, I think it's just great. I think it's like, how cool. U.S. June durables orders revised to negative 9.4 from negative 9.3, so not much of a change there. Factory orders month over month came in at negative 4.8%. The forecast was negative 4.8%, so in line with expectations. Wells Fargo now says their S&P 500 year-end target is 6,300 to 6,500, up from 5,900 to 6,100. Trump says last week's jobs report was rigged, just like numbers prior to the presidential election were rigged. Trump says he will pick an exceptional replacement for the BLS. Bank of America is expecting $700 billion in AI Capex from the so-called hyperscalers through 2025 and 2026, with, quote, upward revisions each quarter, per Bloomberg Intelligence. Like, again, this is what we are doing in the trading community. We are going out there with the main theme of AI, finding the small cap AI stocks that are underlooked and underappreciated. We've already kind of seen the areas, that are going to benefit from this do well, like this AI Capex, like semiconductors, for an example. That's an easy win. Even data centers. While I think there's still upside to data center stocks, they've seen a lot of that appreciation. I think some of the software areas, the actual appliers of this AI technology, are the ones that are being underlooked right now. Think Tesla with the robotaxi network, and soon to be Optimus. Highly overlooked. Okay, there's a lot of smaller companies that are really underlooked right now, and that's where we are investing our capital for those potential massive outsized returns. That 10, 20, 30, 40, 50x is not going to be in the stock that you've heard about before. Okay, it's going to be in the up and coming name that Wall Street, eventually figures out. We're finding those stocks before Wall Street does. Link down below in the description of this video if you would like to come check it out. The Swiss government says trade surplus with the US is not a result of unfair practices, and the Swiss government strives to diversify trade relations. Swiss government says they are not considering any countermeasures at this point. Swiss government says they are determined to make more attractive offers to the US. And the Swiss government say they plan to continue talks with the US. White House senior advisor Hassett says we can't have partisan patterns in massive revisions. Hassett says that we're highly optimistic about the economic future, and he says the job numbers were slower than we expected. Hassett says that data shows tariffs are being borne by foreign producers. UBS says stocks may drop in August, and they see this as a buying opportunity. UBS expects U.S. stocks to fall in August as economic data worsens. Weaker jobs numbers last week raised slowdown fears. Strategists say markets will likely decline until the Fed signals rate cuts, which they expect in the coming months. UBS views any pullback as a chance to buy. And Hassett simply says that big revisions in jobs data require transparent explanations, which I agree with that. If you're going to revise jobs from like 140,000 to only positive 14,000, like you got to be able to explain that, right? There has to be an explanation to that. Logically speaking, like what's the math? What happened? How can we get better? And that's the idea, is not creating, even worse BLS data, but getting to the bottom of why we're having these revisions in the first place and how we can improve to get more accurate data. Because when economic data is what Wall Street cares about, and it's so inaccurate that you can't even take the first number as even remotely accurate, there's an issue there. How do you invest with that? So again, I think all of this news is partially why the S&P and the Russell are rising today. The lack of bad news over this weekend, the lack of bad news today. Again, Europe pausing any of their planned retaliatory measures on the US for 6 months. All of that's pretty positive. And as I explained in videos over this weekend, I've been under the view that we were going to have a consolidation period, like a 2 to 3% down move, not a correction, but like a 2 to 3% down move, kind of trade sideways for a while, was going to happen. And it seemed like people got a little bit too fearful on Friday with the 1.64% decline on the S&P, with over 2% drop in small caps. Russell was down 2.04%. You got a little too bearish too fast. So recovering some of that was pretty much in the cards for today, and that was my expectation. You have to remember, Trump wants stocks to do well. Right after the jobs report came out and we were down 2% on the Russell, 1.5+% on the SPY, what did Trump do? He said the numbers, they're not real. Whether that's true or not, who cares? But he fired the BLS so we can get better people in there to give us better data. Okay? Markets like that. It's a sign again that Trump likes the markets. Do you really want to fight a president that, gives himself a report card on how the markets are doing for the next 4 years? I don't. If you do, let me know down below in the comment section. As we also talked about over this weekend as well, the RSI had hit a high recently of 76. In fact, you were the most overbought you had been since July of 2024. So almost exactly a year ago. Now, while the RSI can get into the 80s typically when it gets overbought, you only got to 76, 77. I don't see this market as frothy at all until small caps start to seriously break out. Like if small caps get to a new all-time high, start really extending higher from there, then we can talk about a frothy market. But we are nowhere even close to that, with small caps still down about 10%, even after today's 2% rally from all-time highs. Okay, but what you have done is reset a lot of the sentiment metrics. So now stocks are still near all-time highs. But on Friday, CNN Fear and Greed Index was at 50, so exactly neutral. Today, after a 1.5% move higher in the S&P, you're only back to 57. So if we hit new all-time highs, you're not going to be in extreme greed like we were a month ago, right? You're going to be midpoint of greed, high point of greed. But you've reset some of those expectations. So you have more fear and a larger wall of worry to climb, which is actually a very positive thing, which again, I believe we're going to be heading into a very strong period. Really November, December, I think those expectations for 2026 are really going to start to go up. And you're going to see certain areas of this market like small caps, high beta, interest rate sensitive names do very well. You might get a bit of a drag on big tech because they're already just pricing in a lot of good news. Whereas maybe the Russell is the catch-up trade into the end of this year. You can also see here the percent of stocks trading above their 50-day moving average is back down to 48.5%. We were reporting on this in the 70s, okay? In the 65 to 75 range. You're back to really a low side of a bull market. So you've even reset some of your technical measures as well, which again, just gives me more confidence that we could continue to power higher from here. We do have a lot of earnings this week as well. I'm not going to run through the whole calendar just to save us a little bit of time in this video, but some big names today in after hours: Palantir, Hims and Hers, Mercado Libre. Tuesday pre-market, tomorrow pre-market, Caterpillar, BP, Lemonade. In after hours tomorrow, AMD, Supermicro, Open Door, Snapchat, Lucid, Rivian, and Upstart. Wednesday pre-market, Uber and Shopify, Disney, Novo Nordisk, like McDonald's. There's a lot of huge companies still to report. Wednesday and after hours, AppLovin, IONQ in the trading community. We bought that at $7, by the way. We're very early to that one. Thursday pre-market, Celsius, Eli Lilly, ConocoPhillips, and Vistra Energy, as well as Sony. Thursday and after hours, The Trade Desk, Rocket Lab, SoundHound, again, some AI-centric names here, Block and Pinterest, Twilio as well. And then Friday pre-market, you have Fubo and Tempest AI. So you have a lot of AI names, some semiconductor names, you know, like Uber, I don't know what category, transportation, I guess you'd put that in there. Some high-flying names here today in after hours with Palantir and Hims. So while it's not going to move the headline S&P, you will see a lot of movement in single stock earnings and related industries. So the volatility is going to be here under the surface for the next couple of weeks, heading into NVIDIA earnings, which is really largely going to cap off the earnings season. So let me know your thoughts on all of this down below in the comment section. Hit the like button as well as subscribe to the channel if you have not done so already. Have a great rest of your day, and I will see you in the next one.